What's up guys, William Ryan here, back with another video. And in today's video I'm just going to be going over the cereal grains markets. Alright, so I'm actually going to be taking you through a trade idea that I'm going to be I'm going to be participating in. So I'm going to be going short either on soybeans or corn, and it's most likely going to be corn. And so I'm just going to be going over the monthly and the weekly charts with you guys, and kind of explaining to you what I see in these markets going into the latter end of this year. So first things first, we're going to start on the monthly chart, and we're just going to delineate that price ran up here, right? So we had a really nice bull run here on wheat, and we took out this high over here. Okay, so price rallied, took out this respective high. Okay, so we made a higher high here. When we go over to soybeans and corn, right, you guys are going to see that we failed to take out this high here. Okay, so we'll go over to soybeans now. And here you guys can clearly see that soybeans has failed to take out this swing high over here. Okay, and so what SMT indicates to us, right, if we have one commodity taking out the high and then the other two are failing to do so, that's indicating a change in state of delivery. Okay, so when we had that SMT here on wheat, right, we took out this high and price was failing to reach up into this high on soybeans and corn. It's indicating a change in state of delivery. So we've been moving higher, right, this whole time. We got the SMT, and now price is moving lower. All right, guys, so I hope that made sense. And we're going to take a quick look at corn so you guys can see that we did in fact fail to take out that respective high. All right, so when we have SMT divergence in the marketplace, right, like I said, it indicates a change in state of delivery. And so when we go down into a weekly chart, right, we can look at things a little bit clearer. Right, so we have a swing high here, right? Price runs up, takes out this swing high, right? We fall short of the high that wheat took out. So what does that indicate to us? Okay, a swing high is in place here, right? And if we are looking for institutional order flow to be bearish or to become bearish, we need to see a shift in market structure. So the market structure shift comes right here. So when price breaks down through this low, institutional order flow is now bearish. Okay, and as you guys can see, price came down. We created a low, just came short of this fair value gap, created a swing low, and we have since rallied back up into the middle of the range. Right, so we are currently sitting at equilibrium, just under equilibrium of the current price swing. Right, so I am looking to go short in this fair value gap and potentially in this order block if price really gets exaggerated on the upside during FOMC for the manipulation before the move lower. And so we have the ICT fair value gap and order block. Oops. All right. So if you've been following along, I typically tend to use the ICT 2022 model. And so this is exactly what we have here, right? the liquidity run, we have SMT to confirm bears, we have the market structure shift, and then we have price coming back up into a premium, right, with premium arrays, so the order block, the fair value gap, and ultimately we are looking for price to sell off for the sell side liquidity pools below the marketplace. Right, so we have this first target here in the form of these equal lows, right? So this is going to be my first target. And if we get really over exaggerated on the downside, which I could see, right? It's not out of the picture yet, right? With inflation rising at an all-time rate and the interest rates continuing to go up, that is going to soften the commodity markets, the forex markets, the crypto markets, and the stock index markets as well. So going into Wednesday, I'm going to be looking for potentially a run on this high. To then go short. So if price wants to come up one more time, hit this order block, and then start to move lower, that would be ideal. And so if we were to look at, let's say a psychological level per se, we have the 710 level here, right? So price could come back up into this order block one more time and then sell off, or we could just end up selling off a little bit early tomorrow. I'm not too sure. I'm going to monitor these charts intraday and see what kind of entry that I can get. So this is what I'm looking for, guys, on the cereal grain markets. And if you guys go back a couple videos ago, when I outlined the NASDAQ move, right, the NASDAQ shorts from last week, right, that actually panned out, this is the exact same setup. Literally the exact same. So if you guys are having, if you guys find this video insightful and haven't seen the NASDAQ video, that's going to complement this one. So I highly recommend you guys going back and watching those two videos because I am anticipating the same price delivery in the cereal grain markets. Okay, guys? So I'm looking for price to sell off, to take out the equal lows resting below here, and moving right along to soybeans. Okay, we have pretty much the same fractal. Okay, and to be honest with you, you could go either or in this scenario, just because of how close these markets really are. Like going back to corn, like look at how similar those fractals are. They're very, very similar. All right, so I potentially want to see price come back above these equal highs, right? It seems like they've primed equal highs. So at the FOMC release, I would like to see price potentially rally in here into a deeper premium. Right? To then go short. So if we look at potential institutional levels that we can get in at, 1520 is a great level to be looking at to go short. All right. So yeah, this is exactly what I'm looking for. Very, very similar fractals, right? Even going back to NASDAQ last week. And so just like corn, this is going to be our first target. And then we could potentially take a portion off at the fair value gap that I have outlined here, right? So if price seeks the sell side liquidity below these lows, and we are in fact going to be correct on this trade, we could take some partials at this fair value gap here, right? And ultimately, depending on how bad inflation gets and how exaggerated the dollar gets and the interest rates, we could definitely see a big sell-off in the commodity markets, right? If you guys look at the monthly, right, we'll go over to corn. Okay, so we can see that, right, from a conceptual standpoint, if you guys follow along with ICT, we understand that equal highs and equal lows are going to be the draw on liquidity. Okay, so the algorithm is going to seek the orders above and below those liquidity pools, right? And why isn't the draw on the buy side, Ryan? You may be asking, there's equal highs here, right? Well, it's because, like I mentioned before, dollar is bullish, interest rates are not slowing down, in my opinion, and are only going to go up. That is going to soften the commodity markets, the crypto markets, the indices markets, and the foreign exchange markets, right? So what do we have below the marketplace? Does this look appealing to anyone? It looks appealing to me, right? We had the SMT on the monthly here with wheat. Okay, so what is that indicating to us? It's indicating that institutional order flow is now bearish. Right? So going back down into the weekly again, if we think of a market maker model, okay, going back to ICT's market maker models, how many legs of distribution are typically in a market maker model? Leave a comment down below right now. Okay, before I give you the answer, leave a comment, like, subscribe, share this video. Right? Market maker models usually have 2 to 3 legs of accumulation and distribution. Okay, so on the buy side of the curve, it's usually 2 to 3. So in this instance, we have 1, 2. Okay, and on the sell side, I'm anticipating a minimum of 2, right? So we have this leg here, right? So this, from this high to this low, I count that as a leg of distribution, right? So the smart money reversal happened up here, lower is short, and then now price is retracing into a premium to then distribute those orders lower. All right, so I'm expecting the second leg of distribution here. Right, so I see that coming into the marketplace this week and even into the coming months. And what invalidates all of this? Okay, right, well, we're going to see it fundamentally. So if interest rates do begin to drop and the dollar index begins to ease up a little bit, then we're going to see it there. But in the chart, right, so let's say if I were to get in here, right, so if price came up Now to get at 1520, my stop loss would be above this swing high at 1650. All right, so this is where I'd be looking to put my stop. Because if price comes up here, right, we have two gaps, right? Price can come into this order block here, right, if we get really exaggerated, but I don't think we will. I think we're going to come into the consequent encroachment of this gap and then sell off, or somewhere in that area, right? But this would invalidate the shorts as if we were to, let's say, close above this gap in here. So if we close above this fair value gap in here, then the short idea is off and we're probably going to get stopped out. Alright guys, so I'm going to be taking a position this week either on soybeans or corn. I will let you guys know. I will keep you guys updated on my Twitter and on my Instagram. And so if you're not following over there, please guys, if you guys find this content helpful and betters you as a trader and pushes you along in your trading journey, please feel free to follow along my social media. I'm more active over there than I am on YouTube at the moment, and so it would be really appreciated if you guys did that. But yeah guys, like I said, I'll keep you guys updated. I'm anticipating shorts, and we will see what type of entry I end up getting. Alright guys, so be careful this week, FOMC this week, so like ICT said, be nimble, be quick, and don't overstay your welcome. Until next time, good luck, good trading, take care.